Good morning and happy Monday to you. Thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Mathew. And as it turns out, the indications are that we might just start positive yet again in the Indian equity markets, notwithstanding the global context. And that global context is that Asian markets are trading just a little weak at this juncture, and that's probably because of the latest print on China's GDP, which has come in significantly below the expectations. This is for the last quarter ending June. Now, let's take you through the expectations or rather the context for the market trade today. And if you were watching the end of last week, you saw quite a bit of a spurt in the benchmark index, the Nifty 50, ending with gains of over 0.7%. And that was largely driven by the IT pack. As a pack, they all gained. In fact, all of the constituents gained. And if you looked at the top 5 or 6 gainers, you will have seen 5 IT, or out of the top 6, you would have seen 5 IT names right on the top in trade on Friday. Of course, all eyes are going to be on HDFC Bank today. That merged entity will trade for the first time. And not just that, you also have results of HDFC Bank that will be announced, and you'll get some color on the merged entity in the results today. In terms of key levels that you would want to watch, because we've closed at a life high yet again, and because of the run-up that you've seen, the Nifty 50 support level has moved up from 19,300 up to 19,400. For the Bank Nifty, which has been a relative underperformer, the key levels to watch would therefore be the support, which is at the 20-day exponential moving average of 44,554, a close below 44,500, and that 44,500 again is a very key level to watch. If it closes below that, you could see selling pressure. If it closes above that on a decisive basis, it could in fact ignite fresh buying. Of course, a lot of support being provided by foreign institutional investors as well. In the month so far, they have bought equity of over 30,000 crore rupees. So that's all positive. The sector that I mentioned was in focus was IT, of course, on Friday. And in fact, let's try and get a little context, because we had HCL Tech results, we had TCS results, as well as Wipro, and nothing significant to write home about. And yet, you saw at the end of last week quite a bit of a spurt for all of these names. We're joined, in fact, by Sandip Agrawal to try and get some context as to why this is happening. Sandip, good morning to you. Like I was mentioning, very sharp move on the Nifty IT at the end of last week. But the performance for the first quarter wasn't really that dramatic, right? It was, if anything, maybe to a certain extent below a certain number of metrics that you guys were tracking. Why do you think that was what happened on Friday?
So, thanks for having me on the show. And as you rightly mentioned, there was nothing to take home about the IT results, all the 3 large results. There was nothing which would have even, given some indication of even a positive opening, forget, the kind of rally we witnessed. But we have to also remember that, markets are very smart and they are always ahead of time. So if you recall that, in March 20, when after the onset of the pandemic, we saw that, first the US big techs started falling like a pack of cards, and NASDAQ made a real bottom. And then, after 2 or 3 months, we saw some recovery in those stocks, but that time Indian IT stocks were falling still. And after 1 or 2 months of gradual recovery in the NASDAQ, we saw sharp recovery in Indian IT stocks also. So, basically, today, if you see the situation, and I have seen this in last 20 years of my career multiple times, that when, the salaries are postponed, when variable pays are postponed or cut, when joining letters are postponed or delayed, that is probably the time when stocks make bottom, although the results may make a bottom maybe after 1 or 2 quarters, but the stocks mostly make bottom at that time, because worst of all, everything what can happen is already there in the estimates of every analyst, and there is no further scope of big cuts. For example, if you see, while all the 3 results were not great, but you would not have seen a sharp cut in any estimate from any analyst in any of those names. So basically, we are done with the cut in estimates, and from here, when things turn around, there will be upgrades. So basically, that is what market starts building in. So in my previous interaction also with other channel, I clearly said that while numbers may not have bottomed, and they may bottom in 1 or 2 quarters, but given this symptoms of wage hike delays and all those things, I think that the stock price may have seen their bottom. So I maintain that view.
Okay, so stock prices may have seen their bottom, but at the same time, Sandeep, we're talking about a 3-month gain of about 9.2%. You're talking about the last 1 month, because of probably Friday's move, we're talking about Nifty IT as a pack up as much as 7.3%. The question then is, if you enter at this point, if you've called that bottom on the price, and you say that now is a good time to start accumulating, if that is indeed what you're saying, what is the potential from this point on for the IT companies?
So I think there is a possibility that there could be some 5-7% correction from here, because something which has moved up so sharply could obviously see some correction. But prima facie, if you see fundamental numbers, there is very low probability. If you see Bloomberg estimate or individual analyst estimate, also the markdowns which has already happened, there is very low probability of any further cuts. Now, only way the stocks can fall if there is fresh negative news, or multiple derating, which looks unlikely, at least in the large cap names. So you have to invest with a 12 to 18-month perspective from here, where you have to be mentally prepared that we can see a 4-5% downside in worst case scenario, but from there we will still make good upside. So I think 20-30% upside in next 12 to 18 months in the large names is a very much possibility, with a 4-5% bad news kind of cushion which you have to keep while investing. So for long-term investor, it looks a good positioning. You can obviously buy based on your what do you think is the right price. So that is a different thing. But I think broadly there is not much to lose from here.
Yeah, and the picture that you're providing is a very optimistic one, definitely, Sandeep. So from that perspective, I will ask you, which of the top IT companies would you pick? You said there is a potential upside for the large IT companies, 20 to 30% over the next 12 to 18 months, which is quite a sizable upside. So which, according to you, is the pick? And what do you think about the smaller ones? LTI-Mindtree, fresh entrant into the Nifty 50, posting its results today.
So just to highlight that LTI-Mindtree is no more a mid-size company. They are bigger than Tech Mahindra now in market cap. Yeah. To be factually right. So I would say this way, that generally the sector always moves in a tandem. So it is always better to go through a basket. It will be hard to make choices, because we are all doing, most of the IT companies are in similar business lines. So calling one above another is quite difficult. There could be a quarter's gap here and there for the performance, but broadly, I believe that large cap pack as a whole should do well. There is good leadership in TCS, very good leadership in Infosys. There is a leadership change in Tech Mahindra, and we have seen in past how leadership changes has resulted in better growth, better margins, and better re-rating of some of the stocks in Tech pack. We also believe that Wipro, from pricing point of view, is quite low at current levels. There is very less to lose there. And remember, all these companies are backed by very strong buybacks and dividends. So many funds will be looking at them from that perspective also now. In the mid cap space, while growth is better than the large cap space right now, but so is the valuation. So I would only say that there is not so much of downside protection in all the mid caps as much as there is in the large cap. So large cap, I would say the downside risk is more protected. So I would prefer a large cap right now over the mid caps. But obviously, selectively, some of the mid caps can also do well where there is leadership change.
Understood. Sandip, thanks so much for joining in. And I guess we're going to have to change that nomenclature of Big Five and probably call it Big Six now. But thanks so much for joining in and giving us that perspective.
Thank you. Thank you so much.
All right. Now, let's shift attention and talk about more earnings, because that really is the flavor of the season. DMart came out with numbers, and to say that it was a disappointment would probably be a little bit of an understatement. Himanshu is joining in to give us all of the details. Morning, Himanshu.
Good morning, Alex.
So very key misses on the profit number and on the margin number. Absolutely. What are the key details to watch?
Absolutely. So earnings season for this DMart remain muted this time. And we noticed a third consecutive weak quarter. So revenues were up 18% year on year, standing at roughly 11,500 odd crores. And EBITDA margin stood at 8.9% versus the 10.3% in the previous year. PAT was up 2.3% at 695 crores. And this is primarily driven by the lower mix of high margin merchandise, which is your general merchandise and apparel, especially the apparel segment, which we are seeing struggle quite a lot. Management comments of the gross margin are looking positive moving forward, but we'll have to see how DMart progresses. In terms of its store openings, they remain low this season. While I was reading the Jefferies report this morning, they were positive on them building on 40 plus stores in the coming 3 quarters, because DMart usually sees more store builds in the second half of the year. And that primarily is the essence of the DMart's earnings report summed up. And we are expecting better numbers moving forward, but this earnings season remained rather a disappointment, like you said.
So you will have to watch out for Avenue Supermart in trade today. You could see a bit of a downside on that stock, and we will try and get some analysis also as to what drove the weak numbers, whether that's likely to continue going forward as well.
Right.
Several other earnings that you've been tracking, Himansh, could you
Right.
take us through them very quickly?
Yeah, a host of earnings reports came out very recently over the weekend. So we firstly have Rallis Q1 FY24 reports. So sales were down 9.4% at 782 crores on a year-on-year basis. EBITDA margins stood at 14.1% versus the 13.1% over the previous years. And PAT was down 6.6% at roughly 63 crores. So not really good signs coming in from Rallis. But then moving on to JSW Energy, their first quarter results on a consolidated basis came in. Their revenue from operations were down 3.25%. Standing at 2,900 odd crores. EBITDA was up 19%, roughly 12,000 crores. EBITDA margin was up 796 basis points, and net profit was down 47.66% to rupees 290 crores. Bandhan Bank, their standalone year-on-year results were as follows: sequential decline in loans, and the rise in GNPAs, gross NPAs was disappointing. Net interest income stood at 2,940 crores, and the PAT, which stood at 720 crores, was largely driven by a decline in the credit cost, which stood at 2.6% against Nomura's estimate of 3.8%. Now, talking about GTPL Hathway, their revenue was at 23%, standing at roughly 774 crores, and EBITDA margin was at 50.5% versus the 19% in the previous year. And the net profit saw a decline in 27%, standing at 35.2 crores. VST Industries reported a revenue increase of 7.5% at 330 crores on a consolidated basis over the previous year. EBITDA margins fell from 31.69% versus the 39.3% in the previous year. And now talking lastly about Just Dial, their revenues were up 6.2% at 247 crores. Their EBITDA margins fell down to 14.7% over the 15.3% in the previous year. And the net profit also fell by 0.04%, which is a marginal decrease to 834 crores. So those are all the earnings summed up for you.
Quite a bit. Take a breath.
Yes.
Thanks so much, Himansh, for joining in and for giving us all of those numbers. So clearly a lot of stocks that you'll want to watch out for in trade. Just a small correction, because Himansh rattled out a lot of those numbers. The EBITDA for JSW Energy was at 1,222 and not 12,222. Rishi is joining in to give us some perspective on a couple of counters, Vedanta as well as JSW Steel. Operational updates for both of these companies, Rishi.
Yeah, good morning, Alex.
Morning.
Yeah. So Vedanta Resources, which is the parent of India's Vedanta Limited, is said to be in advanced talk with the Zambian company, Zambian government, over the Konkola copper mines. Now, the Zambian government owns about 20% in the Konkola mines, while Vedanta Resources owns about the rest of the 80%. Now, in 2019, the Zambian government had placed these mines under provisional liquidation, and it had taken over the assets from Vedanta Resources regarding these mines. Now, this provisional liquidation essentially means that the government has more or less almost all of the powers of the board of directors. Now, since both now Vedanta Resources as well as Zambian government are looking to increase their copper production, since even for Zambia, copper production accounts for quite a major chunk of its GDP. So any movement in this direction would also be beneficial for Vedanta Resources and Zambian government, and that is what the latest Bloomberg report is telling us. Now, regarding JSW Steel, it is in early talks to acquire about 20% stake in Tech Resources coal business. So Tech Resources is a Canadian metals and mining giant, and it was looking to separate its coal business as well from its copper and zinc unit. So Elk Valley Resources, which is its coal unit, produced about 21.5 million tons in 2022. Now, Nippon Steel as well as the Swiss mining firm that is Glencore had previously shown interest to acquire stake in Tech's coal business. So since if JSW does go ahead with bidding for this stake, it would be something that is really positive for the stock as well. So that's something to look out for.
And any idea as to how long this will take to pan out?
So both JSW Steel and as well as Tech Resources have not yet commented anything on this. So this is based on a Bloomberg report again.
Yeah.
So there's not much details from the company. So that's more of a source-based thing.
All right. Thanks so much, Rishi, for that. Clearly, a couple of counters that you'll have to watch out for. Vedanta has lost a little ground, of course, in the recent times. But then you saw a little bit of a pop in the steel counters earlier in the last week. So those two counters. Apart from that, you have the aviation stocks to watch out for. Interglobe Aviation maintaining its leadership role in the passenger market share in the month gone by. Varsha is joining in to tell you more about that. Varsha, good morning.
Good morning,
What can
Alex.
you tell us about the latest aviation data?
Yeah, so there's a DGCA has released aviation data where India's domestic air traffic in June rose 18.8% compared to the same last year. Domestic airlines carried almost 1.24 crore passengers in June. But however, it fell 5.5% compared to May when airlines carried almost 1.3 crore passengers. And also, June marks the fourth straight month where domestic air traffic in India has surpassed pre-COVID levels in India. Now, let's look at the aviation pie that we have got. The market share of India's largest airline, Indigo, rose 180 basis points in June, recording the second straight month of rise in market share after the collapse of Go First, which stopped all operations on 2nd May. Indigo's market share for June stood at 63%, and Air India retained its position as the second largest domestic carrier in June and garnered a market share of 9.7%, mainly due to grounding of Go First. Vistara's market share in June fell by 90 basis points to 8.1%. Air Asia India, which is also the part of Tata stable, rose to fourth spot in terms of market share. Its market share rose by 10 basis points to 8% in June. Now, let's see the passenger load factor or the occupancy rate. So, except Air India, all the companies have occupancy rate of more than 90%, which is healthy. Now, the other business update that I've got is Metropolis Healthcare. So, if you see, the core business revenue growth for Q1 FY24 stood at 12% on year-on-year basis, while the total revenue from operations for Q1 FY24 stood marginally negative as compared to Q1 FY23, mainly due to COVID and B2G contract. Also, Q1 FY24 saw seasonal impact on margins. The company expects the margin trajectory to improve in rest of the financial year. And also the B2C revenue growth stood at 12% on year-on-year basis. Now, there's double-digit growth in diagnostic sector, which is expected. Also, if you see, there are many online players that have come into this industry due to the entry barriers being low. But this industry is growing so fast and also in double digit. I think this industry will accompany all the players that we have got. Plus, the scaling, it's very difficult to scale the diagnostic business, and these big companies, listed players, have got edge on it. So let's see how this plays out for everyone.
Fantastic. Thank you so much, Varsha, for that. And of course, a lot of these companies have been dealing with how to change business back to the norm that is post-COVID or post-pandemic. A lot of their business was related to testing activities during the COVID-19 pandemic. For now, let's turn to some of the other stocks you want to watch out for in trade on account of news updates. HAL, this is a counter that you should look at. It has signed a joint venture agreement with Safran Helicopters Engines, and this is in order to jointly build helicopter engines. Angel One, there was a notification that was sent out by the National Stock Exchange as an order that was passed against the company, dated the 14th of July. And this is on account of an alleged violation of the capital market and F&O segment regulations by the company's authorized persons. There was a monetary penalty of 1.66 crore that was issued against the company, and the company is also prohibited from onboarding new APs, that is authorized persons, for a period of 6 months. Power Grid Corporation of India, the company's board has approved 3 proposals on the 14th of July. Those include an investment of over 4,000 crore rupees for the implementation of advanced metering infrastructure projects. The second is a transfer of telecommunications business undertaking of Power Grid to Power Grid Teleservices. And finally, the revised investment proposal for establishing a pilot data center at the company's Manesar substation at a cost of 713.8 crore rupees through Power Grid Teleservices. Adani Power in focus. The company commissions India's first transnational power project in Godda in Bangladesh. That power plant has a capacity of 1,600 megawatts. And Adani Power Jharkhand completed the dependable capacity test for that plant on the 12th of July. And finally, of course, the first unit of the 800 megawatt of Godda plant began commercial operations on the 6th of April, and the second unit began on the 26th of June. Now, there is a significant development in Mumbai that could, in fact, change the landscape of the city. At the very heart of Mumbai city is Dharavi, and the Dharavi rehabilitation project has been in the works for at least 2 decades, if not more. And there's a significant development there. Sajit is joining in to tell you more. Sajit, good morning. What is it? And this is quite a big headline for the city, isn't it?
So, it's been going on for multi-decades now.
Yeah.
The redevelopment of Dharavi, which is a huge area in the middle of this city. And there have been multiple rounds of bidding that has happened. And finally, in the last round, Adani was the financial bidder which was selected, which had a financial bid of more than 5,000 crores. On Friday, the government of Maharashtra released the government resolution which declared Adani to be the highest bidder. And now, as per the protocol, the housing department is supposed to come out with a letter of award for the redevelopment of Dharavi, which is called Dharavi Redevelopment Project. The project entails investment of over 20,000 crores over multiple years, which also includes a rehabilitation of all the slum dwellers in that area to an adjoining plot, which is 47 acres of railway land, which will be first developed. It's estimated that roughly 80,000 to 100,000 houses would be built in as per the new survey that will be undertaken by the Redevelopment Authority along with Adani. What is going to happen is that they're going to create an SPV where Adani Realty will hold 80% and 20% will be held by the government of Maharashtra, and this will be a non-dilutive right, which basically means for any further investment into the SPV will not dilute government of Maharashtra stake below 20%. This SPV will be capitalized with 500 crores, with 400 crores coming from Adani and 100 crores from government of Maharashtra. So it's going to be a big one. It's estimated that it will take 7 years to complete this project, especially the creation of homes and rehabilitation of those slums. That will take at least 7 years, and it will take a lot of up to 90% of this amount which has been bid in the financial bid has to be invested in creation of those households.
That's significant. But if you think about the change that it will entail, there are several regions that are very core to the city's functioning.
So yeah, from the West Mumbai, if anyone knows Mumbai, from West Mumbai to Central Mumbai, that entire parcel will have to be, and it's going to be one of the largest real estate redevelopment project globally as well, because it's one of the largest slum. Dharavi is, Asia's largest slum. So it's going to be one of the largest redevelopment project which is going to come in over a period of time.
Interconnectivity, once things change, of course, maybe we'll see it over the course of the next 10 years or so, but then one could envision changes in the roadmap for the city as a whole as well.
Especially western to the central and to the eastern suburbs, the interconnectivity or using of multimodal transportation. There's a lot of industries which are situated there. They need to be, rehabilitated or zoned out to a different area and ensure that, they're environment friendly, because many of the industries are not environment friendly at this point in time. So all those measures will have to be taken before that. happens.
Absolutely. All right. So that's the perspective on Dharavi. There's also a new listing, or rather an IPO that is opening for subscription today, and that is NetWeb Technologies. ITES is what it operates in.
Yeah, it's an interesting company. They're mainly into high-tech supercomputing,
Oh,
so
interesting.
providing supercomputers to institutions, educational institutions, and agencies across India, mostly in domestic markets. They have two big supercomputers to their names. So one was Erawat, which was released in June of this year, and which is supposed to be the 75th fastest supercomputer in the world. But the company is coming out with an IPO which opens today. Its price band between 475 to 500. There's a fresh issue of 206 crores. Offer for sale for 425 crores, taking the total size to 631 crores. The company is valued at around 2,800 crores at the upper end of the price band. They're going to use some for capex of 32 odd crores, but they also have a huge working capital requirement, which is at 128 odd crores. So it's a business which takes 90 to 110 days of receivables, and that's the working capital use is going to come into effect from there. There is also repayment of slightly some of the loans of 22 odd crores. So it's almost a net debt zero company if you take into account all the payments they make. But yeah, it's a interesting company, supercomputing and high tech computers in the domestic market, and there's a huge demand for such services, and they also do private clouds, so that's also going to bring in much more revenues going forward.
All right. Thanks so much, Sajid, for that. And in fact, that brings us to the end of this edition of Trade Talk. It's been an absolute pleasure bringing it to you. There's lots more that you should catch up with over the course of the day. You'll find all of that right here on BQ Prime.